Good afternoon, everyone. My name is Nikhil, and I'm pleased to welcome you to an insightful webinar on salary planning by FCA Ms. Rachika Bhagat. She is Managing Director, Neeraj Bhagat and Co. Now, this session aims to simplify the new tax benefits and key changes introduced in the Budget 2025 by providing clarity for the salaried class and including those that are retired persons. I request you all to join us and gain expert insights and understand how these updates can impact financial planning and compliances. Please ensure that you make most out of this opportunity to gain insights and stay informed about the latest tax reforms. Also, notice that this would be a 45-minute session and we'll take the question answers in the very last 10 minutes or so. Thank you very much. Over to you, ma'am, please.
Thank you, Nikhil. Thanks for the nice introduction. So, hello all. Thanks for joining this session dealing with the recent changes in Budget 2025. Hoping this session will impact your take-home salary and you will be able to make more informed decisions regarding your investments. So, let's start the session. Well, this is a summary of all the changes that are introduced in Budget 2025. So, I'll be taking all these points one by one in my subsequent slides. We all know that budget is announced on February 1st each year, bringing corresponding adjustments to the tax structure. Ever since this government has introduced the new tax regime, they are primarily more inclined towards implementing this new tax regime. And if you see all the latest changes, all the changes are in fact done in new tax regime only, leaving this old tax regime largely untouched. We all know this new tax regime is by default our tax regime. So if in case I want to opt for old tax regime, then in that case, at the time of filing of your ITR, you have to log out from your new tax regime and then only you will be able to file your income tax as per the old tax regime. But the good thing is, if any person who has an income other than business income, that is, you have any income other than business income, then in that case, it is a good option to you. You can switch over between old and new tax regime each year based on your tax liability. So as I said, all new changes are there in new tax regime. There is no such change in old tax regime. So in new tax regime, first and foremost changes that are tax slab. Initially, the maximum amount not chargeable to tax was rupees 3 lakh. Now this figure has been increased to rupees 4 lakh. That is, our slab rate will start from rupees 4 lakh. You don't have to pay any taxes if your income is below 4 lakh per annum. Well, whenever government comes with budget, they normally gives a title to the budget. So this budget, that is budget 2025, that was a common man budget, also called as Sabka Vikas budget. So what makes this budget a common man budget? Well, it may be because our exemption limit has been increased. For normal persons, it is 12 lakhs. For salary class employee, it is 12 lakhs 75,000. In fact, as we have discussed, that slab rate has also been increased from 3 to 4. It may be one of the reasons, but whenever government introduces a budget, they always have a solid reasons for bringing the change. And this year, we all can see there's a huge change in the budget. So what was the basic reason? Well, what I think is basic reason was the government was having intention to protect Indian economy, to boost up the domestic consumptions. We all are aware of the global scenarios. If you see there's geopolitical war, there's change in policies in Europe, tariff war is there in US. In fact, deflated and weak economy is there in China. So I think all these have contributed a lot for the government to take this step towards protectionism of the domestic market. In fact, government want to increase the domestic market. That is, they want to create more demands in domestic market. They want to churn more money in the domestic market. They want to churn more money in the economy. So that is why I think maybe it is inevitable for the government to make this decision that they should increase this. the main intention was to maximize the cash in hand for the common persons. It should increase their standard of living, and simultaneously, it should increase the cash in hand, that is, cash flow in the market. So, that is why maybe the government has taken such a huge leap for exempting the tax from rupees 7 lakh, that was earlier, to rupees 12 lakh in this budget. So, if you see on the slide, I'm going to give a brief regarding this. So if you see on the slide, if you have income of rupees 25 lakhs, then in this case, under old tax regime, you were supposed to pay taxes of 5 lakh 83,000, whereas in new tax regime, it will be, as per the budget 2025, it will be 3 lakh 43,000 approximately. So approximately you have a saving of rupees 2 lakh 42,000. So in total, if I compare budget 2025, that is, I compare between old and new tax regime, then almost you have a saving of 22,000 per month. Similarly, if you compare the same figure with last year taxes under new tax regime, then you have a saving of rupees 1 lakh 14,000 approximately. So one that I have already discussed with you, that in new tax regime, there is increase in slab rate from 3 to 4. Another thing is that now our annual income is exempt up to rupees 12 lakhs. So when I say 12 lakhs, that is for all person other than salary person, because salary person are going to get additional benefit of standard deduction. So for them, there is a standard deduction of 75,000. So I can say for a salary employee, in total, 12 lakh 75,000 income is exempt, which means if in case I have income of 12 lakh 75,100, do I have to pay tax? Answer is yes, you have to pay tax. So then your slab rate will start, and slab rate will start from rupees 4 lakh. But the good thing here is you have a maximum marginal relief that will apply to you. So in crux, if your income exceeds 12 lakh 75,000, even by rupee 1, then also you are supposed to pay tax. But marginal relief will always apply. So if we compare between old tax regime and new tax regime, as I said, that income for salaried class employee is exempt up to rupees 12 lakh 75,000. If we see the tax structure in old tax regime on 12 lakh 75,000, then in that case, you have to pay taxes of rupees 1 lakh 24,800. So in total, on 12 lakh 75,000, if you go for new tax regime, then you will be saving taxes of rupees 1 lakh 24,800. Well, I often get this question from the people. They normally ask me that slab rate starts from 4 lakh. How come that the income of rupees 12 lakh is exempt when our slab rate always starts from 4 lakh? Well, answer to that question is because of tax rebate under section 87A. So even though our income is slab rate starts from 4, but still our income up to 12 is exempt. So this is tax rebate, that is rebate on tax, which was earlier also there. But the only point is earlier the tax rebate was under new tax regime rupees 25,000. Only now it has been increased to rupees 60,000. So when I say income up to 12 lakh is exempt, then which income? What are the components of that income? Well, we must understand there basically income is divided into two components. One is normal income, another is special income. So normal income is income on which slab rate is applicable. And when I talk about special income is the one on which special rate of taxes are applicable. For example, we all are aware of that in case of long-term capital gains, the tax rate is 12.5%. So that is a special rate of income. For short-term capital gain in case of listed shares, the tax rate is 20%. Then from lottery, winning crossword puzzles, the tax rate is 30%. So all these are special incomes. So when I calculate rebate under 87A, then rebate is applicable only and only to normal income. It do not include any of the special income. So I'll give you an example for this. Coming to the example. So if you see on the screen, my salary income, which I call as a normal income, is 7,60,000. And my special income, that is short-term capital gain and long-term capital gain, that is rest. So in total, my total income is 11,65,000. So as per layman person, since I have an income below 12 lakhs, so my income is exempt. But answer is big no. My income is not exempt. I have to pay taxes because there is a component of special income in this. So I'll be paying taxes on short-term capital gain as well as long-term capital gain. But my salary income, on my salary income, I'll be getting rebate. So you can see I'm getting rebate only on the normal income of rupees 18,000. For rest part, that is short-term and long-term capital gain, I have to pay taxes. So crux is 87A rebate is there, under which your total income of 12 lakh is exempt, but 12 under 12 lakh component, it is only normal income, not the special income. So looking at the size of population in India, we all know that it is very impossible for the government to give social security benefits to all the employees. That is why if you see in old tax regime, there were forced savings. That is, you have to invest in those forced savings like LIC, ASI, PF, and health insurance premium you have to pay, so that in the old age you will get the benefit, one thing, and apart from that simultaneously government used to give tax benefits. So that way they were old tax regime was having this dual benefit. But unfortunately we all know when new tax regime was introduced, there was no such forced saving. That is, there is no social security benefit was there. But in fact, from 2023, government changed the scenario. They introduced standard deduction in new tax regime. Then they introduced the benefit of NPS in new tax regime. So in budget 2025, the big thing that they have done is they have increased the exemption limit. That is, if your employer is contributing towards your NPS, then in that case, 14% of the salary is exempt. So you can get the benefit of NPS up to 14% of the salary. So this is a good benefit for all those now who want to invest in social security benefits. So who says income is exempt up to 12 lakh 75,000? I'll say it is exempt up to 14 lakh 65,000. You know how? So let's look at the screen. So assuming my total salary is 14 lakh 65,000. When on that, I'll be getting standard deduction. Then there is a component called employer contribution to PF. This is employer contribution to PF. I'll get deduction for that from my basic salary. And then next come my NPF. So NPF is, again, as I said, it is 14% of the basic salary from 1st April 2025. So in total, if you see, if I deduct both these components from my salary from 14 lakh 65,000 directly come down to 11 lakh 9,500, which is much below than 12 lakh, that is the taxable amount. So in present scenario, if you see, I don't have to pay any taxes on this salary. That means in total, if you plan your salary in such a way, then your salary can be exempt of 12 lakh 65,000. So this is the benefit that I most like, because this is a great relief for the senior citizens. If you see earlier, if any senior citizen getting bank interest or they were getting interest from FD, then bank used to deduct TDS at the rate of 10% as in when this FD interest exceed rupees 50,000. But now from budget 2025, that is 1st April 2025, this limit has been increased to rupees 1 lakh. So if in case any senior citizen is getting interest and that interest amount exceeds rupees 1 lakh, then only bank is going to deduct TDS at the rate of 10% on whatever interest the senior citizen is getting over and above rupees 1 lakh. So coming to TCS, we all are aware of TCS, that is tax collected at source. So nowadays, it is very frequent, even every next person is remitting money outside India under different occasions. So here the TCS comes into scene. So when I talk about TCS, first let me discuss about the provision of TCS, and then I'll be discussing what major changes are there in TCS in our budget. So first of all, if in case employee has submitted paid any TCS, then you should submit all the documentary proof of TCS that you have paid to your employer so that he can take this TCS amount also into consideration while calculating your TDS component. Ultimately, your TDS will be reduced by whatsoever TCS you have already paid. Or I can say your TCS can step into the shoes of TDS in that case. So this is the benefit of TCS, what all you have paid. This was introduced in last budget, but this time the changes, what changes are? Let me discuss those changes. So first of all, if you are remitting any money outside India for your children, for their education, and this amount is being remitted from their education loan, then in that case, whatsoever amount you are remitting, that is irrespective of the amount that you are remitting, there is no TCS. Yes, provided it is being remitted only from the education loan account. But what if I'm remitting any money outside India for the education of my children, but I have not taken any loan? Then in that case, till 10 lakh, I don't have to pay any TCS. But if I'm remitting any amount beyond 10 lakh, then in that case, I have to pay TCS at the rate of 20%. One thing I also want to add here, it is not about the education, remittance for education. If in case you are remitting any amount outside India for your medical expenses, then also the same procedure will apply. Similarly, for any other case, apart from tour packages, same provision will apply. That is till 10 lakh, there is no TCS. Beyond 10 lakh, TCS is 20%. And then comes the last point here to be discussed, that is with regard to tour packages. So if I'm traveling abroad and I've taken any tour packages or I have exchanged my currency, so in that case, till 10 lakh, TCS will be 5%, and above 10 lakh, TCS will be 20%. But as I told you, whatsoever TCS you have paid, either on remittance, on the purchase of vehicle also, you can get the benefit provided you submit all the documentary proof to your employer. So there are certain changes with regard to threshold limits and rates of TDS, but I will be discussing in this session only the relevant points that affect our tax planning. So coming up the first point, if in case I am earning any interest from debentures. So earlier the threshold limit was rupees 5,000. Now it has been increased to rupees 10,000, which means that if in case I'm getting interest on debentures over and above 10,000, then only TDS will come into scene. Here the TDS rate is 10% that will come into scene. Same goes with dividend. So earlier threshold limit was 5,000, but now it has been increased to 10,000. So if what all dividend I am receiving from any particular company and they are paying me dividend over and above 10%, 10,000, then only they are going to deduct TDS at the rate of 10%. Interest on securities, I have already discussed with regard to the senior citizens. For others, I want to discuss basically for post office and cooperative society. So if interest from these two is exceeding above 50,000, then only TDS will come into scene. Otherwise, there is no TDS. Same goes with your commission and brokerage and insurance commission. Again, here the threshold limit has been increased from 15 to 20,000. Next important is rent. So if in case you are getting any rental income till 2,40,000, till financial year 24-25, there was no TDS. And if in case you are getting rent beyond 2,40,000, then TDS was there. But now this limit has been increased to rupees 6 lakhs. That is 6 lakh for the entire year, 50,000 per month. So in case if you will get any interest over and above 50,000 per month, then only TDS will come into scene. Similarly, if you have income from the mutual funds, then again the threshold limit has been increased from rupees 5,000 to rupees 10,000. So coming to the next change, that is with regard to the self-occupied house property. So in this budget, government has introduced the new provision. That is, earlier what used to happen was, if I was having more than one house property and all of them were self-occupied, so only one house property was treated as self-occupied house property, and remaining properties were treated as deemed to be let out. That is, assuming that they have been let out. Since it was assumed that they have been let out, therefore tax was deducted. Sorry, we have to pay tax on that because we assumed it to be let out. But now, from budget 2025, if in case I have more than one self-occupied house properties, then two of such properties can be treated as self-occupied. Remaining all properties will be considered as deemed to be let out, and then tax has to be paid. So I am getting additional benefit of one property. So now onwards, if I can treat two house properties as self-occupied. We all are aware of updated returns. So previously, updated returns could be filed within 2 years from the end of the assessment years. So, and approximately 90 lakh people, they voluntarily filed updated returns and they have paid additional tax by disclosing their additional incomes. So motivated by this response, now government has extended this time frame in budget 2025. So what they have done is now the taxpayer have 4 years to file their updated returns. So from 2 years, they have increased it to 4 years. So now till 4 years, you can file your updated return, which will allow you more time to address your errors. It will allow more time to report all those incomes that you have missed and to comply with the legal compliances. That is to be legally more compliant. Now they are giving you 4 years, not 2 years. So you have time in case if you think you have missed any income in previous years, in case you think you have filed wrong returns in previous year, now you have 4 years to rectify that error. Similarly, it will reduce the litigation part also. But I must discuss here, in case of updated returns, we can only file those returns where we have to pay taxes. We cannot file those returns where I am claiming refund. So no refund is granted in updated returns. Only it is that tax, extra tax that you have to pay. In fact, with every time span, that is 12 months, then 24 months, then 36 months, and 48, the tax rate, the tax that is additional tax that is to be deposited, it increases. So I think this is a big relief for HR also and for employees also, because earlier you have to link your PAN and Aadhaar card. Unless and until you have linked your PAN with Aadhaar card, your TDS was deducted at higher rate. But now, thankfully, government has simplified this procedure. Now, simply the procedure is you have PAN card, which is effective or not. So if in case you have PAN card, which is very much valid and effective, then in that case, TDS will be deducted as per the normal provisions. But if you don't have PAN card, then TDS will be deducted at 20% or regular rate, whichever is high. So this has quite a lot simplified the procedure as compared to earlier one where we used to do linking between PAN and Aadhaar. I think I have covered almost all the changes that are coming in the budget, that are there in the budget, that is 2025. But still, I want to discuss some of the deductions, some of the allowances under new tax regime, old tax regime, and which are applicable to both. Reason being, there is lot of confusion. In fact, HR also at times asks whether this particular benefit is it deductible under new or old or both. So this is the frequent question that I am getting from employees as well as HR. So now I'll be discussing those benefits which are exempt in the hands of employee under new as well as old tax regime. So if your employer is providing you any accommodation in hotel, if you have gone outside or your RFA has not been provided to you and you are residing in hotel, then that is totally exempt. Similarly, if your employer is providing you with car, and that car is being run for the official purpose only, then whatsoever this benefit employer is providing, whatsoever expenses he is paying, that is again totally exempt. If in case employer has given you any gift up to rupees 5,000, it is totally exempt. This 5,000 limit is for the entire year. But if in case your employer is giving you this gift by cash, then it is taxable. Similarly, if employer has taken any group health insurance policy for all the employees and he is giving this benefit to the employees, then in that case, again, it is totally exempt. If he is bearing your medical emergency reimbursement, again, totally exempt. If he is providing you laptops or he is paying your telephone bills, again, all these are totally exempt. And simultaneously, if he is providing you with any training or education facility to enhance his business, to promote his business, then again that benefit is fully exempt in the hands of employees. So we all are aware of HRA. In fact, each and every employee might be aware of HRA. But unfortunately, we all know that HRA deduction is not allowed in new tax regime. It is only applicable in old tax regime. So is there any other benefit that I can get that can substitute my HRA or that can fall into the shoes of HRA? Answer is yes. So there is a provision of rent-free accommodation. It is not entirely on the, like you can say it is a replica of HRA, but yes, to some extent, it can be substituted for HRA. So if in case RFA is there, RFA, let me discuss this thing, rent-free accommodation. So if employer owns any property or he has taken any property on rent and further he provides this property as an accommodation to the employee. So in this case, RFA comes into the scene. This property can be furnished also, it can be unfurnished also. So if any such facility is provided to the employee, that is covered under RFA, and tax liability of RFA depends upon the population of the city where the house property is actually located. So I think this is a good substitute for HRA. As we are discussing HRA, I want to discuss deduction under 80GG. So many a times it happens that employee is residing in a rented premises. He is paying rent, but unfortunately, he is not getting any HRA from the employer. So in this case, whatsoever rent he is paying, that is all in vain because he is not getting any tax benefit on that rent. Well, that is not the case. If you are an employee, you are paying any rent of the house where you are residing, you are not getting any HRA, there is no property in your name or in the name of your family members or in the name of HUF to which you belong, still you can get the benefit under Section 80, that is up to rupees 60,000 per annum. Still, you can get the deduction. So, for all those who are not getting HRA but still paying rent for the property, they can claim this deduction under Section 80GG. So purposely I took this slide because what happened, many of our employees, they have got this notice from the department. So I'll be discussing that notice later on, but I want to discuss this deduction. First of all, if any employee is claiming HR and he is paying rent of rupees 50,000, that is 50,000 or more, then that employee has to deduct TDS at the rate of 2% on whatsoever rent he is paying over and above rupees 50,000. This TDS can be deducted once in a year. It can be deducted at the end of the year, that is in the month of March also, if employee fails to deduct this. So I want to add one more point here. Even if the employee do not have TAN number, still he can deduct this. But if employee fails to deduct it, so this year, many of the employees, they have received, some of you also might have received this notice. So if you have failed to deduct, so department is not giving you deduction of HRA for all those who have not deducted and deposited this TDS. So make it a point that if in case you are paying rent of 50,000 and above, then you have to deduct TDS of your landlord, which is at the rate of 2%. Well, then there is certain benefits which are only and only applicable in old tax regime, not in new tax regime. First of all, reallocation allowance. So any reallocation allowance is paid by the employer if you are reallocating to any other place. Then whatsoever amount that you have received and whatsoever you have spent, whichever is in fact, you can say less is exempt in your case. Then if you are getting uniform allowance or attire allowance, again, it is exempt to the extent of amount received or spent. Gift voucher, I have already discussed. Then personal pursuits, if you are getting any benefit, that is your employer has taken in subscription for your magazines, for journals, for books, to discharge your official liabilities. That is for your office purpose. Then whatsoever subscription that employer is paying is totally exempt in your hands. Similarly, children education allowance, this we all are aware of. It is still the same since 1961. That is rupees 100 per month per child, maximum for two children. So food coupons. So if in case your employer is providing you food coupons, again, this is applicable only in old tax regime, not in new tax regime. So if employer is providing any food coupons, it is exempt up to rupees 50 per meal, maximum two meals a day. And we normally consider 22 working days in a month for computing this deduction. And if in case your employer is providing you with tea, coffee, or any non-alcoholic beverages during the office hours, they are not covered under this food coupon. That is, they are totally exempt. Coming to the NPS part, Social Security benefit that I have already discussed, but this is something which is in old tax regime, because in new tax regime it was introduced only in 2020-23. Earlier it was there in old tax regime. So under old tax regime, there are basically three components of NPS. One under 80CCD, where employee contributes towards NPS. So whatsoever amount employee is contributing towards NPS, that is exempt up to 10% of the salary. Then there is also additional contribution. So if in case employee is additionally contributing over and above 80CCD 1, then he gets additional benefit of rupees 50,000. That is why if you see ATC deduction is in total rupees 2 lakh, that is 150 plus 50. So this 50 is from 80CCD 1B. And the rest, if employer is also contributing any amount towards NPS, then it is exempt up to 10% of salary if the employee is non-government employee. In case this employee is government employee, then exemption limit is 14%. So if you see in old tax regime, deduction under 80CCD2 is still the same. It is 10% of basic salary. But if you are paying your taxes under new tax regime, then you are going to get the benefit of 14%. So under new tax regime, you can say that exemption limit is same for government as well as non-government employees. But under old tax regime, for government employees, it is 14%, and for non-government employees, it is 10%. I also want to clear one more thing, because a lot of employees, they face this confusion. In case if your employer is contributing towards your PF, simultaneously he is also contributing towards your NPS, and this total amount exceeds rupees 7,50,000, then whatsoever amount that is exceeding rupees 7,50,000 is taxable in the hands of employee. Again, I repeat, if your employer is contributing towards both PF and NPS, then in that case, if this contribution exceeds 7,50,000, then it is taxable. Similarly, many of us, we are contributing more towards our PF to maintain more social security benefit, or to safeguard our old age. So if in case your employee contribution, that is your contribution towards PF, exceeds rupees 2,50,000, then whatsoever interest you are getting on PF contribution over and above 2,50,000, that is taxable in the hands of employee. This we should see before contributing towards your provident fund. So I think I have covered almost all, and it is hard to discuss each and every single detail about the salary related tax rules. in this session. But as I said, I have covered mainly majority all the changes that are related to budget 2025. And I think that this will be helpful. That is, these updates will be helpful to plan your tax better. It will helpful to make your investments, invest your investments more smartly. That's all from my side. Over to you, Nikhil.
Hi. So everyone will be taking questions for the next 10 minutes or so. I believe you must have already shared the questions that you wanted to have answered. If not, I request if you can just share the questions over on the Q&A chat, please. Yes, ma'am, can you see the questions? I believe Mohan has sent one.
Is the difference between rebate and marginal relief? Okay. So look, rebate is your tax rebate that you are getting, and relief is on your income if your income exceeds rupees 12 lakh 75,000. So if in case your income exceeds 12 lakh 75,000 for a salary employee, assuming 12 lakh 75,100, so you see your tax will be around somewhere in lakhs. So to give that benefit, just because of by increasing income of rupees 100, you are liable to pay so huge taxes. The marginal relief is there, and rebate is totally and totally on taxes. Any medical expense in new taxes? Yeah, unfortunately, I'm sorry, there is no such medical expenses, no such medical relief in new regime. What is the maximum amount of rebate available to any taxpayer? As I said, it is 60,000 rupees. TCS amount is deducted from final tax liability. Yes, as said, it will reduce your TDS amount. You suggest new tax regime or old tax regime for the people all salary slab. Look, looking at the salary, look, nowadays, one thing is there are so many softwares. In fact, at income tax portal also, if you see there, you can easily compute which one is better for you. That is old tax regime or new tax regime. So whatever is beneficial for you after calculating through software, you can opt for. If PF and NPS is above 7 lakh 50 to what portion the additional tax will be? So any contribution that is over and above 7 lakh 50,000 that is taxable, as I said, it will be added to your salary. So under old tax regime, it is 10%. As I already said, for government employees only in old tax regime, it is 14%. For non-government, it is 10%. But under new tax regime, it is 14% for all the employees, whether government or non-government.
Please do send your questions if you have anything else you want to ask.
This is my salary from Dubai, April to August. Since my salary from Dubai, April to August, is being taxed in India, is there any double taxation relief or free tax rate can I apply if the taxes are paid in Dubai and deducted by my previous employee? Look, if in case your any taxes has been deducted in UAE, then yes, for sure you can take the benefit of double taxation. So while filing your return, in that case, we can claim the benefit of whatsoever tax has been paid in UAE by you. So total income will be added, that is UAE income plus Indian income will be added at the time of filing of ITR, and whatsoever is the tax, from that tax you will be getting the benefit of tax that has been paid in UAE. No, under new tax regime, there is no such provision for disability. I'm sorry. So it was covered by 80U earlier in old tax regime, and 80U is applicable only in old tax regime. It is not applicable in new tax. The salary income is more than 15 lakh, then how much tax I need to pay? As I said, there are so many softwares that are available. Income tax portal itself provides you software where you can easily calculate your salary as per old and new both. In case of TCS, if father and mother contributes 10 lakh each to child foreign education, will it be look, in case of TCS, if both father and mother they are paying, so I will always suggest that they should pay from their own separate account. So it will be considered 10 lakh individually, then total 20 lakh will not be counted in that case. Gratuity received from the previous employee in August 2024 has been marked partly taxable. Could you please explain criteria used to determine the taxable portion, especially since it is received abroad? Gratuity received, so gratuity provisions depend upon which gratuity it is. One thing, then how for how many years you have worked and where you have worked, depending upon that. But as I have told earlier, also in case if you have paid any taxes in Dubai, you can claim those tax benefits. You can claim the benefit of whatsoever tax you have paid in Dubai at the time of filing of your return.
Do we have any more questions, please? Ma'am, I think this is it. There are no more
If
questions
my
the people have.
If my wife take personal loan and I decide to pay 50% of EMI, so I send 50% of that EMI to her bank account every month with this. The amount I send to her be treated as extra income source and will be questioned by income tax, or this will be ignored. So if any amount you are transferring to your wife, it can be considered as gift by you to your wife, and anyhow it is exempt.
So we'll be taking the last two questions now.
Our loan we can't show under income tax. So you pay income tax on your income, and there is no as such any benefit if in case you are repaying a principal amount or interest amount on car loan, especially when that car is taken for the personal use. So you need to check ETA. EEA is no longer applicable. Would you advise any tax planning strategies or deductions I should consider under either new or old tax regime? Look, with regard to your tax planning and deductions under new and old tax regime, it depends upon what salary you have. So then once I determine what exact salary you have, based on that, I can divide your salary into different components so that minimum tax liability is attractive.
I think, ma'am, there is no other question that you have. Thank
We
you.
have
Thank you very
covered.
much. Thank you very much for this informative session. I'm very sure the attendees, there's one more question if you'd like to follow.
So, ma'am, how far we follow old regime if new followed? As I said, if you have any income other than business income, that is, business income is not part and parcel of your total income, then any time you can switch over from new to old and vice versa.
Thank you. I think this is it, ma'am. Thank you very much for this informative session on salary planning. I'm very sure and I'm hopeful everyone must have, say, gotten something out of it and they can use it for their future job roles respectively. Thank you very much, everyone. If you have if you have any other questions, you can always write us back at info@neerajbhagat.com. Thank you. Thank you all. Thank you, ma'am. Take care.
Thank
Thank
you
you.
all. Thank you.